Good weekend. Ira Epstein, and here we are with the weekend of October 26th, 2024. This is your weekend edition for your financial markets. I'll start off by saying that during the week, Monday through Friday, I won't be putting out these videos. I will a week from today. I'm taking some time for myself just before the election, so that's basically what's going on. For my subscribers, you will get your written updates of the trades that I want you to make, where to make adjustments while I'm gone as well. So nobody's left in the dark, but the freebies here. So in looking at the markets, you can see a good rally happen on Friday. As we look at the gold, 27.54. We'll see if the market can add on to that this week. Silver backing off, so the gold silver is doing this, inverting a little bit there. The copper market, I think, is just going to mark time now as the market waits to see what happens between the 4th and 8th of November when China has its next meeting where it's going to decide then what fiscal policy is. Now, there's a difference between monetary and fiscal. They know what they're going to spend, from what I understand. It's how they're going to do it and what they're going to do. The dollar has been strong at the beckoning of many currencies which have fallen. On October 30th, you're going to get in the pound, Rachel Reeves, the first exchequer in 800 years. Can you believe that? In the UK is going to deliver the new budget. It's going to be make it or break it time for the Labour Party. On the energy markets, not sure how you look at what took place today. I'm doing this on Saturday. Israel attacked, because of time differences, in the wee hours of Saturday, Iran. It looks to be a very measured attack. It attacked no oil facilities. It attacked nothing nuclear. It doesn't look like it was serious damage. They went after air missile systems, liquid fuel, things of that nature, more military targets. And we will see if this just dies down or how Khomeini reacts to all this. This coming week, Anthony Blinken will be in Qatar meeting with others, trying to formulate another Israeli deal. Forget it. This isn't going to happen. Hamas is going to hold tight, and that's just how it's going to be. It would take them to cave in, and they won't. They will stay the distance because they don't care about the people. They care about the cause that they're fighting for. So I don't look for that to go on, and that means more fighting in Lebanon unless Lebanon can absolutely break the distance between itself and Hamas, who it's chosen to make trouble for Israel because of that situation. So that's where you leave it go. Now, what do the weekly charts look like is maybe where we should all head. On the E-mini S&P, if you finished right here, which you did, what do you have? An all-time high close. So the market at 58.46, you're going to hear people still talking about the 6,000 level. You know that. We're going to see a week where the markets are going to pay a lot of attention to what do the polls show. We're down to 10 days now before the election. You'll get down to the nitty-gritty. You're hearing no income taxes. You're hearing all far-fetched things the candidates say and can't deliver on because they can't do it by themselves. They need Congress to come in. But they say what they want to say. I saw ex-President Trump was on for 3 hours with Joe Rogan. Wow, that's an awful long time. And these two at one point weren't the best of friends. Now they're great friends and a big following, 17 million people on 2 different sites, each one. So that's pretty big. But in any case, that's where you're at. You can see how the market on a weekly basis fell 1%, but still very much in an uptrend. You can see on these charts that the trend has gone up to new all-time highs, and the pattern is one of still bullish with higher lows, higher highs, absolutely. The weekly chart supports 56.36, but that'll move up. If you go back on the chart and you look at last week, you were 56.15, and the week before 55.89. So it's moving, let's say, 20, 25 points a week. So it's probably going to move up to the 56.50 area, something in there. But that's still well below the last break low of 57.24. If 57.24 is taken out, you go into a full pause on the chart. Barring that on a weekly chart, where's the resistance? The number you keep backing off and have been. You go up, you get a break, you go up, you pull back a little. But the market has been bullish, and that's because you have the bullish embedded reading. Now, if while I'm gone next week, the red line closes under 79, well, then a correction's probably underway. The Dow is very much the same pattern. You have the embedded reading, you have the pattern of higher lows, higher highs. A number that gives you pause potentially would be getting under 42,091. That could give you a break back to the 18-week average of closes, but I don't see anything that can turn the chart on the current pattern in these two indices bearish. You can leave the uptrend, but I don't see anything that can turn you bearish just yet. You're plain overbought in the NASDAQ, and we know the NASDAQ was up strong on the Thursday and Friday due to Tesla earnings, which just carried that while the other indices backed away a little bit. So very interesting what's going on. I understand that Mr. Musk picked up $26 billion in those 2 days. Higher lows, higher highs on the valuation of Tesla. In the Russell, now it's too hard to still get overly bullish. Now, if the whole market goes up, yes, this will go up. And you're seeing that the 200-day average is laying here. The Bollinger Band crossed it, but that doesn't mean too much. 2185 is probably a support zone. The upper Bollinger Band, 2330.5, probably the near-term resistance. In the interest rate sector, we keep adding. The word is adding to yield. And that just keeps the market coming down, as you can see. Now, is the market going to get overdone before the Fed meeting's a big question? We won't know that until we get and see some labor numbers, right? That'll give the Fed an idea if they're winning or losing this labor battle. I think the economy, on all the numbers I've seen so far, looks like it's doing just fine. So I'm by myself in the camp that's going, I don't think the Fed really has to do anything in November. If they want, they can go bigger in December, if that's warranted. I mean, you know, that's how I'm viewing it, but that's right now. I want to see the rest of the data, and I will be back to see that, quite a bit of it, because I'll be back into Chicago very soon. Lower highs, lower lows, still bearish. When you come to the dollar index, it's over everything. It's a vertical price rise. At any time you can pull back into these numbers, but if it keeps going, wherever the upper Bollinger Band is could be the next objective. And as the dollar has a vertical move up, the eurocurrency coming down, I'm very much under the impression that you're going to see the European Central Bank debate very seriously 25 or 50 basis points at the upcoming meeting. So we will see. If it's 50, I think the market can go into this 107.33 area. In the Canadian dollar, you're in the neighborhood where I think short covering's probably now becoming the thing to do. Take some money off the table against the lower band. In the Japanese yen, until the government there decides they really are going to step up and do their job, they're just letting it come back. I think they're going to wait and see what the U.S. does before they make another decision. In Bitcoin, remember, October expired on Friday. You now move to the December contract. You went up to the upper Bollinger Band this week and you're backing off. You're overbought. I think the pro money came out of the market right there. In Brent, now this is WTI versus Brent. The higher you go, Brent would represent the first number, so it's carrying a bit of a premium. I don't know if that'll stay in place now that Israel's made its attack. Nothing looks to me like it should escalate from that unless Khomeini wants it to escalate. We will find out if that's the case. I wouldn't think he would. I would think that he said, all right, they've struck back in the paper. We'll say we defended ourselves superbly. We reserve the right to attack, and they let it sit. That's what I think is going to happen. Higher lows, but you're still under the 18-week average. To me, this chart's still bearish, and I think this chart waits on what China's going to do or not do. I think it's really going to determine how much crude goes up or down. WTI, you have the swing line up, but the trend is down as you're under the 18-week average. Gasoline is the same thing, so they all came off hitting the Bollinger Band and finally turned to the, if you will, north, but it won't take much. It'll take getting under last week's lows and all these, and you resume the downtrend. Now, while I'm gone, my advice to you would be take advantage of the free offers that we make available to you. If you go to our website under iraepstein.com free offers, you will see that you can select any offer you want on a page that will move. It'll look like that. And these are the different offers. If you want to get my market research, I write it twice a day when I'm not away, and I don't go away very often. And you can see how these markets are just working with that all at this point in time. You come in, you click that off. When you're through clicking what you want, you give the market at the bottom, there's a place for your name, your email address. You fill that all out. It'll come to us. We take care of it, and we get it out to you normally within 2 to 3 business days. So that should come to you fairly fast. So how do you get all this done? It's simple. You can go to Ira Epstein free offers and move your cursor to the top and take care of it that way. And with that, I'm Ira. I will catch up with you next Sunday. So you have yourself a great week. I'll be watching the markets. Let's see how active they get. Take care.